Hey, it's Robert Weinberg, your mortgage advisor and financial coach. I wanted to discuss some specific programs available for cash out refinancing. So with the recent rise in home prices pretty much all over the country, a lot of homeowners are looking for ways to tap the equity in their property. There are a few different options that you have, but one of the most popular, if not the most popular right now, is to do a cash out refinance, which basically takes your first mortgage, pays it off with a larger loan, and then you pocket the difference in cash. And that cash can be used for paying off credit card debt, medical bills. It can be used for home improvements like adding a new kitchen or bathroom. Literally any and everything you can think of are what cash out refinances are used for. So with that being said, there are some different programs available that will allow you to tap the equity in your home. And I wanted to talk about the specifics so you kind of knew the guidelines of those and which programs may be most applicable for your particular situation. So the first program let's talk about is the VA loan, or Veterans Administration loan. Now, by far, this is the most flexible cash out refinance program available. There have been some recent changes to this program that did change the guidelines a little bit, but they still are by far the most flexible of any of the cash out refinance programs available. So with a VA loan, if you are an eligible veteran or a spouse of an eligible veteran, you can qualify to borrow up to 100% of the value of your home. Again, there are some restrictions that were recently put in place, but to keep things simple, it will allow you to borrow 100% of your home value. And it's the only cash out refinance option that actually allows you to borrow that much of your home's equity. So if you are an eligible veteran or spouse of an eligible veteran, it may be a great option for you to cash out. The next program is going to be the FHA, or Federal Housing Administration loan. Now, the FHA loan has a specific cash out refinance option that allows you to cash out up to 85% of the equity on your property. So again, it is pretty flexible and liberal on the guidelines that will allow you to borrow a substantial amount of the equity in your home, and there are no restrictions. Again, you can use that for home improvements, debt consolidation, paying off medical bills. You could use it for taking a vacation. Not that I would recommend that, but balls in your court as far as what you need the money for, and the FHA loan could be a great option. It doesn't have the same restrictions as the VA loan as far as needing to be a veteran or that sort of thing. There are specific loan limits for each county in the United States, so depending on your mortgage balance, an FHA loan may or may not be a good fit. You'll want to check with your mortgage advisor on that. The next program is going to be a non-QM, or non-qualified mortgage. So as I've talked about in other videos, a non-QM loan is going to be for those people that have difficult to document income or irregular income, self-employed borrowers, and people that just don't fit in the box of some of these other loan programs, typically because of their income documentation, and they can't fully document the income that they're bringing in with their tax returns. So the non-QM is a great loan option for that. Another really cool fact with the non-QM loans is that they allow you to borrow up to 85% in most cases for cash out refinancing, and they do not require mortgage insurance, or PMI, private mortgage insurance, which a lot of the other loans do. So it is a great option for those self-employed or hard to document that are looking to cash out some equity. Again, 85%, very liberal and flexible guidelines, so check with your mortgage advisor if that may be a good suited option for you. And last but not least is going to be conventional loans. Now, this is your cookie cutter vanilla Fannie Mae, Freddie Mac loans. At the same point, they are the most restrictive on the cash out guidelines. So with a conventional mortgage, while many years ago they'd allow you to go up to 85%, more recently they've been restricting it to 80% loan to value, the most restrictive. It could be as little as 75% depending on your loan type and property type. So if you have a 2-unit or a 3-unit property, you're typically going to be capped at the lower loan to value, but assuming you have a single family primary residence, you will be able to borrow up to 80% of the value of your property for those cash out needs. Hopefully this has been of help to you. Again, as I've mentioned, you want to speak with a mortgage advisor early in the process to identify which of these loan programs are going to be the best option for you, and then they can lead you in the right direction as far as the guidelines and getting everything approved and moving forward with your process. As always, you can reach out to me via social media or text or call my office. The number is 860-413-3938. We'll talk to you soon.